Hello and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We're both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover. We can be contacted at rachel.desouza@rsmuk.com and andrew.robbins@rsmuk.com. So Andrew, there have been a couple of stories in the press recently about tax havens, such as the European Parliament recently saying that the EU's list of tax havens is confusing and ineffective. Not only that, the Tax Justice Network estimates the global tax lost due to the Cayman Islands alone is $70 billion a year. Now, it has to be said that I've had a look at this and I've had no luck in actually trying to track down how they came to that $70 billion figure. But I think the point is that tax havens are seen as a really big problem. So let's investigate whether this is fair, and let's start by being good scientists, I think. So we need to define our terms. What do we actually mean by a tax haven?
I've got a really good, simple answer for that one. A tax haven is an island with sandy beaches and palm trees where people can hide their money in numbered bank accounts.
Okay, to be fair, if we were having this conversation in 2001, I might have agreed with you. But actually, I think the world has moved on a lot since then, and there is a real problem as our vision of what a tax haven is has not kept up with reality.
Well, I think firstly, to be fair to me, I am still living in 2001. But if you insist, we could look at the OECD definition of a tax haven. And to be fair, that actually gives a really helpful and up-to-date definition. And what it says is that a tax haven is characterized by low or no taxes, a lack of information exchange, and a lack of transparency and lack of economic substance.
Okay, so let's take that definition, because I think that's really helpful, and compare it to places that we would traditionally say were tax havens, such as Jersey. Jersey has a huge international network for information exchange. It has registers and regulation to ensure that ownership of assets can't be hidden. And it has introduced specific rules requiring, for example, companies claiming to be resident there to have real local economic substance, i.e. they can't just be a brass plaque on the wall anymore.
And I think Jersey is a really good example there, because there's been massive change over that last sort of 20-year period, with jurisdictions like Jersey really working hard to play the game and to do the right thing. So really, the only thing where Jersey would reach the OECD criteria is the fact that it's got a very low tax rate. And you've got to ask, I think, whether that's enough to justify calling someone like Jersey a tax haven anymore at all.
Yes, I agree. And it's also interesting that the EU list of tax haven specifically excludes any EU country, regardless of their tax policy. And this has got to be deeply hypocritical when you look at some of the tax policies that EU countries have.
I think that's really true. I mean, look at the countries. You've got Luxembourg, Netherlands, Ireland with really low corporate tax rates. You know, that's why, as we all know, Google's European HQ is in Dublin. Other EU countries, you've got tax regimes intended to be attractive to individual taxpayers. So you've got Portugal basically giving you 10 years of tax-free status for non-Portuguese income. Italy allowing you a fixed tax cost regardless of your worldwide income. looked at objectively, none of those policies are particularly different from places like Jersey or Cayman, and yet those countries are EU blacklisted. But Portugal, just because it happens to be sat within the EU, is miraculously not a tax haven. And don't even get me started on the US, which as a country that seems on the one hand to be very vocal about other people being bad tax players, has its own homegrown tax havens, the whole of the state of Delaware.
Yes, I agree. So again, I think it's safe to say that we both think there are a lot of double standards that come into play when we're talking about tax havens. It certainly suits governments to point the finger at them, as it turns the focus away from their own behaviour.
Yeah, tax havens are one of those irregular verbs, I think. I have fiscally attractive tax policies. You are a tax haven. I think if we were being honest, you've got to recognise that most countries in the world are committed to concepts like transparency when it comes to tax. But at the same time, with all of the economic factors we're all facing, there's going to carry on being a healthy competition to bring wealthy people and their businesses into your country. And part of that is to have competitive and attractive tax policies.
So I think the point is, if governments want to protect their own revenues, it's surely better for them to look after their own tax laws and deal with it domestically, rather than trying to complain about somebody else's. Because let's face it, complaining about somebody else's rarely gets you anywhere. Doesn't do anything to protect your own revenues. And I think it's also fair to put into this particular conversation that in fact the UK and HMRC are world leaders in this regard. They're doing an absolutely fantastic job of working with other countries to stop wealth being hidden away, and also to track down people who are trying to hide it. And they have made use of domestic legislation to ensure that the UK system is robust enough to make it very unattractive for people to try and hide their wealth by using tax havens or other countries which have less regulations.
I agree. I think we don't give enough credit to HMRC and the Treasury and the UK tax system, which it may not be perfect, but it does a pretty good job in this area. And I think these days it's very sophisticated, and the days of being able to hide your money in your numbered Swiss bank account and the taxman won't know about it, those days are long gone.
Long gone. I agree. Okay, so having decided that tax havens are not really tax havens at all anymore, have you got something nice to recommend for me to do this weekend?
Well, I have, but as we know from previous episodes, you are the one person in the country who doesn't have Netflix.
We've just got Disney Plus, though.
It's not the same. And it's certainly not the same when it comes to my recommendation from this week. Now, on occasion, I like to go a little bit obscure. This one, actually, although it is a French language crime series based on a 19th century novel, this is pretty mainstream for me. So this is Lupin, which is a Netflix series, which is about it's a sort of a crime caper series. So the hero is a gentleman thief who is investigating his father's death. And he does all sorts of, he pulls off the perfect heist, stealing a Marie Antoinette's necklace from the Louvre, and he breaks into prison so he can interview somebody there. It's quite sort of fluffy. It's really good fun. It's really well done. And if you watch it in the original French with subtitles, you get that wonderful thing of all of the French language as well, which is also very appealing. So Lupin.
Okay, if you say so. I think, you know, perhaps I'm quite thankful I don't have Netflix, actually. Anyway, thank you everyone for listening. As always, please do let us have your comments and feedbacks. We can be contacted on rachel.d'Souza@rsmuk.com and andrew.robbins@rsmuk.com. See you next time.
Bye, everyone.